Chris, thanks so much for your time. So what's interesting is that I see the main driver in profits this time around was the fact that you were able to increase prices of chicken. And I'm interested in how that was possible in an environment whereby you have consumers who some would argue were even more strapped for cash than this time last year.
Yeah, Fifi, thanks for the question. It was one of those years where we had assistance from two sides. From an input cost point of view, we had those two massive crops from maize, and obviously maize into feed is 67% of our cost, so there was assistance. And then on the selling side, there was some strong demand for chicken, and our price is up 7%, but it's dropped back again since that. So we've had a good run, and that was more in the first half of the year, and the second half, that benefit we had started to fade away.
And what drove that strong demand for chicken, do you think? Because right now we've seen many, there's deflation with a lot of food prices, but chicken is one of those items that have gone the other way. Was it perhaps the listeria outbreak where people turned they got scared to eat pork and maybe started to consume a lot more chicken?
I think there's a couple of factors. First of all, chicken is cheap. It is relative cheap to other protein sources. So if the consumer's got less disposable income, then chicken is the way to go. But at the same time, there was a problem with pork and listeriosis and polony. And at the same time, because of the drought, beef was quite expensive. So there was a gap for poultry, and pricing weren't excessive. It was just up from the prior year, and a 7% increase in margin is not that massive, but poultry still by far, on average about 22.50 Rand a kilo, by far the best value proposition for the consumer on meat protein.
Certainly one of the most tastiest for African consumers. Africa though, your rest of Africa operations, I know still a very small contribution to overall earnings, but I see some difficulties there. What's the outlook for the rest of the continent?
The rest of Africa, a bit of a disappointment. We had high hopes for a country like Mozambique. We were ready and prepared to make quite large investments there. But they've got their own set of problems, and it's really not taking off. Swaziland is a small country. It's based more on grants, so you don't expect a lot from that. And then Zambia, good country, stable political scenario, but it's that whole economy is driven around copper pricing. And if the currency and the copper price is not going too well, there's a problem with income and disposable income there. So all those countries not looking too great, and I think that big drive to go into Africa and just go and take it over and is not working. People have to think very carefully before they make big investments in these countries, because it's not that easy.
Just a quick one, Mozambique. How much were you looking to spend there, and what's held you back?
Yeah, we were prepared to double up our hatchery facility and build a new feed mill to the tune of about 80-90 million Rand, but that's off the cards now. That won't happen in Mozambique. We're going to tread water and see how it's going with the government there. They struggle to pay back VAT, you know, so how can you further invest in that country? There are problems.
All right, bringing it back home, the problems that you guys face, and I was with you there on the streets protesting against the issue of imports. You say in your statement, or you show that imports have continued unabated. They occupy some 40% or so of local production. Yet you've been able to deliver quite a good set of results, which makes me question whether imports were really the issue that we're holding, or that was holding the industry from profitability.
Well, it definitely is like that still. It's 43% equal to local production. That's chicken we can produce here. Why import a job loss? You know, that's the first argument. The fact that we were more competitive against that was purely because of the maize crop. You know, so we had lower input cost, and we could absorb some of what the pricing what has gone wrong in the past. But no, I think it's a once-off, and avian influenza across the world made it difficult to bring the dump chicken in from the European Union, and more chicken came in from Brazil, and that should be our next battle, you know, is so you create a job that side, and you destroy a job this side. Why? We should be able to produce our own chicken here. Why import it if we can do it on our own? And that's got to do with trade agreements, which we'll have to tackle one by one. But I firmly believe that it should be South Africa first and not at a price to the consumer, because I haven't seen cheap protein imported, cheap chicken on the streets. Where are they? Somebody's taking the margin in between. So it comes in at a beneficial price to the trader or the imported, but they price the same as our chicken. So that story of the consumer is benefiting, I don't believe so. We don't see it. So buy local.
Buy local. As see quite a fan of Donald Trump's slogans there in terms of South Africa first. But lastly, in terms of buying local, I mean, the industry was quite vocal in its efforts and its pursuit to get chicken zero rated. That didn't quite work this time around. Where do things stand, and what is the way forward?
If you analyze and you go and look at the case of chicken to be zero rated, it's a compelling case from every angle, from every level. We had support from the ANC, we had support from the DA, we had support from COSATU, from all walks of life. We had support, because that is the one thing that poor people need more of, and that's a decent meal and a protein meal, not a energy meal, a protein meal. You need that in your balanced diet. And chicken in South Africa could have played that role. There were studies done by some of the country's best institutions, and it was absolutely compelling that chicken would benefit the consumer most. The unfortunate thing is that government realized it would cost the fiscus in the order of 4 billion rand. And as we stand here, we believe that was the only thing keeping chicken out of that VAT-free basket. But it ain't over till it's over. I didn't come this far just to come this far. So the battle will continue. We will continue to make noise and look for opportunities for chicken to be zero rated, even if it's just part of it or at a different level. And then I believe there is still a small part of the door open for us to, between now and the budget or maybe the election in February next year, to still try and make a change on that.